GoFX, what's popping, man? So, kind of just want to go through a full breakdown of how I've been trading. And, man, I've been having a lot of success. I've been doing really well. I've been having 2K days, 3K days recently, and I'm just doing a lot better. And it's honestly the only thing that's changed is I've made stuff more simplistic. I've started using lower risk rewards. I've started using bigger stop losses. And that's the only thing that's really changed. So, first thing I always look for, right? Number one, I always look for is if price is going up or down. If price is having clear higher highs and higher lows and price is clearly making a bullish run, I will only look for buys. Vice versa, if price is only making lower lows, lower highs, and have a clear bearish run, I will only look for sales. Now, I believe that you have a 50-50% chance of price bouncing at a level. But when you are going overall, but when you are going with the trend and you're going with where price has momentum, I believe that you have a 70-80% chance of price bouncing. And I'll show you examples of that in a little bit. But I really believe that 70-80% chance likely that it'll bounce. I don't think it's a 50-50 thing because when price is going in a certain direction, it always bounces. It seems like off of these levels. If you have a big enough stop loss, a safe enough stop loss, you're not going to be in a spot where you're getting stopped out too often if you follow structure. So that's number one. Number two is if price is going bullish, I'm always going to try and buy at a level that's either a break and retest, or if price just is going and then it starts midway to create a level of support, and we have all this structure here in the past of telling us that price is bullish, and we create a level of support, right? I'm going to start to buy. So it's two things: break or retest, or just buying a level of support. And what I'm going to do with this is when I buy at the break or retest, my stop loss is always going to be below the previous low. I'm going to target at least a 1-to-1, preferably a 1-to-1.5, but whatever the structure level over here is that I can target is what I'll target. Same thing for this. This is a little more tricky because there is no structure point back here, but I'll just give it a safe distance away. Again, I'll target a 1-to-1. I'll target a 1-to-2. Whatever is viable is what I'll go for. Same thing for when it's going bearish. Levels of resistance, breaks or retest. Any level of resistance when price is going down, I'll sell at. Any level of support when price is going up, I'll buy at. And now, again, I use buy limits. I don't sit here and wait for candle confirmations because price could give you a little candle confirmation and go up, and then you'll put your stop loss right here below it, right? And it'll shoot down and then play around again and then go up. Been stopped out a lot of times doing that. So what I started doing, instead of buying right here and having my stop loss right below where it's in a more dangerous spot, I'm more likely to get stopped out. What I do now is I put my stop loss on the level. I have a pretty safe stop loss, and I'll just target whatever I think I can target. It saves time because I don't have to sit there and wait for the candle confirmations. And it's honestly a lot safer, and it plays out a lot more because you're not trying to have smaller stop losses. Because if you enter up here and then you still have the same stop loss that I would have, you're going to have a huge stop loss. So your stop loss would be close. But for me, I have the best entry possible because I enter on the zone. There's no entry that's going to get better than that unless you wait and it goes below the zone. And I have a safer stop loss than the other guys will ever have because they're not going to sacrifice their crazy risk reward, right? Like if you enter way up there, your risk reward is going to be super small. And I don't have to do anything. I don't have to sit there. It saves so much time, and it uncomplicates a lot of shit. So that's what I do. The trend, the structure, breaks or retest, resistance support, and then buy limits. And that's it. And that's as simplistic as it gets. So now I'll show you why I believe that it's a 50-50% chance of price bouncing at a level, right? So in consolidation, I think it's 50-50% chance. I think it can happen, and it also might not happen. So if you look at this, price keeps bouncing back and forth. So realistically, you could sell here, buy here, sell here, buy here, buy here, buy here, sell here, right? You could do that. But the problem with that is that you never really know when price is going to break. If it broke through right here, you would have lost, you know? I think this is a 50% chance of price bouncing at a level. This is a fantastic way to trade. If you want to trade, which I do definitely trade like this sometimes, but I think it's 50-50. You never really know when it's going to stop bouncing and it's going to actually go in the right direction. You don't really know. But when you go with price, you can look at how many times price has rejected all of these levels. There's never really a time when price doesn't reject a level, and if it does, it just goes up a little bit higher and then it still goes in a direction. So you can see here and here, you can see price had this whole level right here, rejection, 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 rejection. You see right here, price rejected it right here. You can see right here. You can see, there you go. You can see how price just rejected it every time. There was not a time when it just shot through because we're going with the flow of price, right? See up here too. And imagine how simplistic all of this would be if all you did was come on the charts and you just look for the structure of price, where it's going, and then you just put your limits and you walk away. So go to the daily, right? Okay, I'm gonna go on the charts and see if there's a trade, right? I'll go to the weekly, it's pretty bearish, right? I should look for sales. Daily, still bearish, I should look for sales. I go to the 4 hour, right? And I look for the nearest level of resistance. Okay. This is that. Okay. So now I know I have everything's completely bearish. I should not look for buys. I should only look for sells, right? So I'm going to put my sell limit right there. I'm going to find a target. This should be the target down here, okay? Then I'm going to put my stop loss in an area that's pretty safe. And if I get stopped out, it's probably because I was wrong about the direction of price, not because it was super, super tiny and I wanted a super good risk reward. It's in a safe place, right? So then let's let it play out. Price comes up, we're in it, right? Now let's see what happens. Price goes straight down to TP, right? Now, that was on a Thursday, right? Thursday into Friday. So now going into the next week, you could look at the same pair and you can have the same idea that it's still bearish and we have this level of resistance, and you can do the same exact thing. You could say, okay, well, I think if price comes back up to this level of resistance, we can sell. I can put my sell limit up there. I can have around the same stop loss. I can target around the same area, and let's see what happens. Price comes up there, hits it, right? Rejects, and then drops, and it hits your TP. All you did was take 20 seconds to look at structure and find a level, and you put a sell limit and you walked away and you came back. You came back to money. You can see what I'm talking about here, where it's like, well, look at all these rejections. Which one do you enter off of, right? And what if you enter off of one of them and you're like, okay, that's a good rejection, like this one. You enter off of that and the price comes back up, stops you out. That's what I'm talking about with this stuff. Like, look at this. This level, oh, these are all good rejections. Okay, boom, put my stop loss right above. I get stopped out, and then it goes the direction I wanted, right? Okay. That's just how I feel about this stuff, and I think it's the most simplistic way that you can trade. And you just put limits and you walk away and you come back to money, right? I think it's the most beautiful way to trade that I've found so far. Um, so now we can look at the trades that I have called out this week. I think last night or a few days ago I called out AU sales, and it was super easy, super easy. It was right here. Called out AU sales. What I saw was I went to the weekly and I said, okay, it's bearish, right? It's bearish. The daily still looks pretty bearish. Go to the 4 hour. Price came up. We had this level of support or resistance. So I put I think I entered like higher. I entered like right up here. Put a sell limit. Stop loss was like that. I targeted it right here because I thought that's where price was going to go. And that was it. That was literally the entire trade, and that's as long as it took. I called out EU sales at the same time. Called it out from right here. Usually it would have been down there, but I saw it when it was up there, and then took sales. Stop loss was 30 pips because it was higher than normal, and then target was just a 1-to-1. You could have taken it down to here 100%. But all I did was I went to the weekly. And I saw, okay, well, overall it looks pretty bullish, right? But we're starting to break past and not respect this level anymore. Starting to look like it wants to be bearish. Broke past this level of structure. So I said, okay, well, it looks like we want to sell. So this is the next level of resistance. I'm going to put a sell limit there, and I'm going to enter, and look what happened. It's simplistic, and you can go to any one of these charts. Any one of these charts, you can see the same exact thing. Go to the weekly, it's bullish, right? So I want to keep looking for buys. You can see price at this level, this break a retest. Rejected it a little bit. Look how it rejected this candle, or rejected this candle, rejected a little bit. If you would have put your stop loss below, you would have got stopped out. Put a buy limit, stop loss at the previous low, not below the previous low because it's already so far away. So I just put it like around where it is. Same thing. When the price comes down, price plays out, goes up. This next level comes down, plays around it a little bit, shoots up. Right? Price creates a level of support in the middle of nowhere. Just put a buy limit, and then it will come back down and hit that support. Right? Break a retest right here. Break a retest right here. All I'm doing is going with structure and finding levels that play into that structure and putting limits and waiting for price to play out. That's all I'm doing. That's literally it. And it's kind of just as simplistic as you can get. I caught, let's see, I also caught, oh, also caught a trade on UJ this week. All right, so go to the weekly. Price is pretty bullish, right? Higher highs, higher lows, it's going up. And then what I saw is we had this daily level that price was approaching. So I said, okay, well, I think we can get a rejection off of this. That daily level lined up with this level of support. Price was right down here when I saw it. I put a buy limit. And I thought we were just going to, it's overall bullish. We have this big daily level, this 4-hour level right here, support. So I thought we would just reject from it. Stop loss was down here, and the target it ended up going all the way up there, right? All I did was look at where price was going and find a level, and I bought. That's as simplistic as it can be. You don't have to make it complicated. And since I started figuring this out, I mean, it's unbelievably easy. There's nothing really to it. And I just like showing the possibility of how easy this stuff can be. I mean, it just doesn't have to be hard at all. There's trades here and there that are a little bit more complicated when I mark them up. Like this one was just a little bit more complicated, but it was the same concept. Price came up to this level on the weekly, and it rejected it. Had a strong push, came up and created a lower high, right, which is a strong sign that we want to turn around. Created that lower high, had another strong push. The reaction when price came back up, trying to create another higher high, is what sold me. Had really, really weak, choppy buys once it got up here. A strong push, came back up, another lower high, and then we had a strong push. And then that was what was the deal breaker. And then we had this level right here, right? At this level up here, sell limit, stop loss above, and you could target down here, target right here, target whatever you feel is viable. And then price, you can see, came straight up in there, rejected it, and then turned around. I mean, it's very, very simplistic shit, and you don't have to make it more complicated than it has to be. And you can see in this whole wave down, on all of these pairs, you can see you could have sold here, here, here. You could have sold here. You could have sold here, right? Sold here. You could sell here right now, right? It's just following structure and taking these trades, and that's it. Putting limits. I mean, if price is already bearish, look at all these trades. Look at all these things that you can take. Here, 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 right? over and over and over. You just go with price and you just put limits at these levels, and it doesn't even. It could be all the way down here. It could be at 2 p.m. on a Thursday, and then it'll activate you Monday at 6 a.m. And then it'll trigger, and you'll win your trade probably around Tuesday the next day in about 24 hours, right? So you could have had legit this trade, this trade, this. There's also this one right here that I didn't mark up. Bang, right there. This, and then that. You could have had all of those trades in this one push down. 1, 2, 3, 4, 5, 6, 7, 8 trades, right? All in that push down. Probably run the same thing on EU. 1, 2, 3, 4, 5, and then now 6. Or actually 1, 2, 3, 4, 5, 6, 7. Just going with the trend, seeing where price wants to go, and just putting limits and finding levels, and that's it. Extremely simplistic. There's nothing to it, man. So I just like showing this stuff, and I like showing what's possible, and I like teaching people and helping people out. I mean, you could have sold off of this 1, 2, 3, 4, 5, 6 times, and another rejection off of that one, and you could have just caught all these trades. I caught this trade right here. This is one of my 2K days. I caught sells right there. And another one. This is another one right here that played out last night. So that's it, man. Just want to show my process and how simplistic it is. Out. And